So good morning, Cam. Welcome back to Trading Success. How are you?
Oh, hey Chris, how did you go last week? Did you have a good week at all in the markets?
Yeah, it was very volatile. That was for sure. A lot going on
Yeah,
as we as we expected, but it definitely played out with a lot of volatility.
yeah, no, it was a great week. The CPI news was good on Wednesday. That seemed to fuel this bullish move, and then the FOMC is normally quite very volatile, and it was kind of a bit of a subdued morning. So, um, yeah, it wasn't the usual fire. But anyway, in that FOMC meeting, it was the chairman, Jerome Powell, the chairman of the Federal Reserve, suggested that the rates will be cut. So he mentioned that it should be by the end of the year, the federal rate should be 5.1 in the US. By 2025, it'll be down to 4.1, and by the end of 2026, it'll be 3.1. So they still want to get that inflation number down to 2%. They did have a better than expected number, so they did come down to about 3.3%, I think. But I think that's their main concern, is just that inflation matter, and also I think the unemployment matter as well. The increasing unemployment might be pushing them to move those rates sooner. So when will it happen? Who knows? Maybe September. But I think we spoke last week. Europe cut their rates, and Canada cut their rates as well. So a lot of the big economies are cutting. But as we know, America drives what we trade. So that's what we mainly focus on.
Yeah, no, it was good. Definitely the indexes had a big move. Gold and silver sort of didn't really do too much, but and Bitcoin I seen dropped actually quite a bit. No doubt you'll run through it all. I'll let you bring the charts up and have a look.
Yeah, absolutely. So this week, not a lot of news. This week should be probably a fairly quiet week. We do have, in the US markets, we have June 16th or June 17th or whatever it's called. Juneteenth. Juneteenth is some crazy public holiday name. But anyway, that's on Wednesday morning, I believe. So was it Wednesday morning?
I know they've got retail sales coming out tomorrow night in the US. But yeah, that's and then unemployment claims on Thursday. But yeah, that's pretty much the main news for them this week.
Yes, I believe there's a public holiday. I'm fairly sure it's Wednesday in the US. So basically what happens there, Thursday morning for us, markets will be closed. So there'll be no trading Thursday morning. So you can have a sleep in, morning traders. I believe it's Thursday morning. So it's Wednesday in the US.
The 19th. Yep.
Yeah. So that date's correct. I wasn't too sure it was Wednesday and Thursday, but I think it's Thursday. So so that's good. So Thursday you can have a sleep in. We've also got contract rollover as well. So NinjaTrader has a great chart that you can use called the Market Analyzer. So you can see the old contract volume, daily volume, and then compare it with the new contract. So we are coming into the 09-24 contracts, so the September contracts for the indexes. So it looks like that's rolled over this morning. I know the ES has rolled over this morning. Nasdaq is still a little lagging in terms of the volume rollover into the new contract, but maybe by European Open it'll roll over. So always be careful with contract rollover, because the volume is equally split for a while, for a day typically, and then it'll roll over into the 09 contract. So maybe today could be a little bit slow going. Who knows? But just always be careful with contract rollover. You don't seem to have the same amount of volume as normal.
Fantastic.
But let's get into the charts. So I'll bring up the first of all, I'll bring up the Nasdaq, because that's the main one we focus on. So I'm just going to share my screen. There we go. Okay, so this is the extended trading hours, this chart. So this is the daily chart with all of the data. Now, one thing I want to point out, one of the key levels this week we just need to be mindful of is, and I'll go to the regular trading hours chart. Now, the regular trading hours is just the cash market. So the US trading hours, all right?
Yeah.
So a lot of the movement that occurs in the markets is in the US cash market, and the 80% of the volume is traded in the US cash market. So it's important to have a look and see what happened there. So you can see here, there's a big gap that's been created. So this was Wednesday. That was the Wednesday in the cash market. So we had a very strong day Wednesday on that CPI news. And then Thursday, we saw this continuation, and then Friday, the market finished on its high. Now, this gap here in the regular trading hours is just one level that we just need to be mindful of, just to be wary of that level. If we come back and test into this area, just watch to see if that area gets filled first. If it can fill it, then it might continue to the downside, but things look a little bit bullish at the moment. So if it does pull back, I'd probably say it'll come back and test, and then maybe we'll trade off it. But quite often these gaps do get filled. So this is typically an imbalance zone in the market, and imbalance zones do typically get filled. However, in the last couple of months with these bullish markets, a lot of these big gaps have not been filled. So there's quite a bit of imbalance into the upside with these markets that we haven't seen filled. So that's a sign that the market is very bullish. So this is the this is the extended trading hours, or the 24-hour data. So you can see where that gap is on the US cash market. So I would just watch that if I was, I know a lot of us don't look at the regular trading hours data, but I would just watch that level up around that the high 19,635. If we do see the market sell down, watch for a test of that area. And also there is a big imbalance area in that whole zone there as well. There's a lot of imbalance last week. The market was very bullish last week. And so in the short term, what I'd probably look at for us at the moment, I would probably watch this candle here. Thursday and Friday has created like a balance range here. Now today we've already made an all-time high in the Asia session. So I would watch to see failure up at these highs and a potential trade back down to this balance area down here. Watch for the market to test the low. So if the market doesn't hold these highs, which it might want to go and test, we're so close to 20,000, right? So 20,000 is such a clear round number. We didn't get there this morning, but we weren't too far off. But we may test 20,000, and then if the market comes back into the top of this balance range, if it fails, then we may look for shorts back to the other range or the other side of the range. And markets can move very, very quickly when these balance rules apply. So that's the Nasdaq. S&P is very, very similar. I'll go to the RTH. So you can see the RTH gap. So you can see on Wednesday, that was the Wednesday's trading on the S&P 500. So we've got this big gap. Friday we came back into the gap, couldn't close it. Thursday we couldn't come back in, and then also on Friday we sort of came into it, but we actually closed outside of it. So we couldn't fill the gap on Thursday or Friday that was created on Wednesday. So that's a very bullish sign in my eyes on this market. So we'll see what the week brings, see if the market does want to come back in and fill this gap, but it's looking very, very bullish on the ES. This is the extended trading hours. So this is the full 24-hour data. So you can see that's where the gap comes from. And the market kind of came in and tested, but couldn't do a very good job. And we've opened up today, and we're just sort of meandering around the open and the close from Friday. So that's really same sort of scenario with the indexes. I would, in terms of the balance area on the ES, I would maybe look at this large candle here. That would probably be the balance zone. So Wednesday's entire trading range. Would probably be the balance.
Off that news.
Yeah, I'd look for a test up at the highs again, up around 5,520 on the ES. The ES is lagging the tech stocks a little bit at the moment. Tech seems to be driving the economy or the markets at the moment. AI, all that sort of stuff is really driving things. So it seems to be a little bit more ahead of the game, a bit more bullish than the ES, which is a little bit unusual. Coming into the end of the cycle, you tend to see the ES being a bit more of the dominator, but Nasdaq, as we know, tech is so strong.
Yeah.
Now, what's been probably the most disappointing market, and I totally get it, is this the Bitcoin market. There's been so much, we talked last week, Chris, about people getting trapped buying the highs on the market right now because of all the hype. And it happened again, just pretty much like clockwork. We said we really needed price. This is the 4-hour chart, by the way. We needed price to really hold above this trend line here, this bull flag, and we just can't seem to get back above it. We try to hold back above it, and then it just fakes. So a lot of people, I think, have been getting caught on this news, and I think a lot of leveraged trades. A lot of people trading the leverage longs maybe are getting trapped here, but the market is obviously it is obviously still holding above, like the last big retracement range. If we draw a Fibonacci, we're just under the 50%, which is around 66, 640, around that mark. So we're sort of hanging around the balance point of that big retracement range. So we've definitely got like a bullish type of pattern setting up here, but I think a lot of short-term traders trying to trade the longs just not quite ready to go yet. So that one there's an interesting play. Are we going to come back and test the lows of this range again? Down around 58, 62,000 seems to be the last real strong level of support. 68 or 67,000 got broken last week. So if we can hold under 67, I think the market could definitely go back to 62. Yeah, so could be some shorts on that market, unless anything big happens. Gold, like you said last week, gold's been a little bit quiet. I think with the news of the interest rates coming back, potentially, an interest rate cut coming, sort of has been a little bit, I don't know whether money will sort of, it should be a good sign for gold. Like with lower interest rates, you'd see that people would put money back into gold, but we haven't really seen it boom away just yet. But it looks like it's still holding its bullish sort of flavor. So that was Friday, Thursday. Wednesday, Thursday. The market seemed to hold its seemed to follow along with the interest rate news. I think it liked the fact that interest rates being cut, and that's just from a technical perspective. If the dollar rate is coming back, then you would find that gold would probably be more attractive entity or commodity, because if you're lowering interest rates, tends to probably devalue the dollar even more, because more people are going to probably come in and want to borrow money. They're going to bring more money into the market. That devaluing of the dollar is probably going to bring more people into the gold market. So you can see how gold has pretty much held itself after that news. So I could probably see gold, steadily grinding to the high side from here, but not a lot going on. And oil had a really good week last week. And we had some really strong days. It really loved the interest rate news.
Yeah.
And it's holding above its 50% range. The contract's rolled over actually to the 08 contract as well with oil. But so we'll see if this market, we're kind of back into that old balance range that we had mapped out over the last, umpteen podcasts we've done. Oil has been mainly in this range. It sort of broke out of that range for a little while to the downside, but it looks like we're back right in the center of that balance range. So if it can hold above 79, then that's the key level. If we can break 79, I think oil is going to continue to the upside. But, I think it's probably going to be a little bit quiet week this week in the markets, and all eyes really on the indexes to see if we can hold those break those gaps, or are we going to continue in a bullish nature?
Yeah, I know. There's definitely plenty to keep an eye on, that's for sure, across all the markets.
Yeah. So good day trading conditions, really. That's the great thing about what we do is there's going to be opportunities to the downside. There's going to be opportunities to the upside. Like already this morning, in the Asian market, there's been a big rally to the upside. We made all-time highs on the Nasdaq, and then we've closed that gap already. So the market's moved already, 60, probably about 40 points already on the Nasdaq, already in 3 hours of trade. So that's a pretty decent amount of move. So there's so much opportunity on the commodities and the indexes, with all of this, all of the news coming out, all of the uncertainty. But it's a bullish market at the moment. So overall, there's going to be some, I think, big moves in the stock markets over the next, pretty much coming into the end of this year. I think we're going to see some big moves in these stock markets to the upside. But until then, it's just going to be, I think, just grinding markets, and a lot of short-term opportunities in both directions. So,
yeah, a lot of political instability as well in going all over the place at the moment between France, and you got Russia, Ukraine, you got the US using the interest of Russia's money to back Ukraine, and it just seems like there's a lot of potential issues coming as well, which always creates volatility.
Yeah, election year as well.
Yeah.
So it's I think this back end of the year there's going to be some crazy stuff coming out. So I think it's good to be day trading, not being fully committed in some areas. I think the stock market is a good place to be in for the next couple of years, because we are expecting in terms of time cycles, we're at the back end of the cycle. So typically the back end of the cycle is like that you see a big boom in the markets. But I think it's good to be day trading.
Yeah.
So anyway, I'm biased, of course, but hopefully we'll we also got a lot coming up this week as well. We've got actually next week we're going to be doing a live trading room trial as well. So if anyone's interested to find out more about our live trading rooms, we've got a trial coming out next week. So if you're on our database, you'll get some emails regarding that as well. So there'll be a members live trading room trial and also a non-member trading room trial too. So if you're not a member of IDTA but you're interested to find out more, I'll be guiding you through those trading room trials. So it should be a great end of June for IDTA as well, with a few new promotions coming out as well. So we'll stay tuned for that.
Excellent. And just to dive into that a little bit, Cam, so that's just to explain to people if they're not members of IDTA, that's them being able to watch you trade live in the markets, real time, real money, and listen to your commentary.
Correct. Yes. Yeah. And we'll have some promotion out too in the on all our social media channels and in the marketplace on those and when those particular dates are going to be. But yes, we particularly for the people who've never done any trading with us, we guide you through that process. handhold, the process of trading. It's a great place. It's the only way to learn as a trader, to learn properly. So many people go off and want to do their own thing, but when you're watching a pro trader to go about their business and how precise they are with what they do, and planned in particular, it's so important. A lot of people just get into trading and they really don't know what they're doing, and they take too much risk. We're very risk averse in what we do. So,
no, fantastic. Sounds exciting.
Yeah, it's good. We enjoy it. Thanks, Chris.
No worries. Thank you, Cam. We look forward to either seeing if we can hit 20,000 this week on the Nasdaq or fill a gap, one or the other.
Yeah. I think it's going to, those balance ranges are one to look for. I think really mark out your balance points, mark out those 3-day balance ranges, and watch how the market behaves around the highs and lows of those ranges, because I think that's where your best trading opportunities are going to be. And that's the thing, you don't need to overtrade in this trading arena. That's where most people come unstuck, is by trading too much. And what we've done at IDTA is we really find those levels. We really scout out for those levels where we're going to get the best moves. And that's the best way to trade is find those support and resistance levels with confluence, with lots of the strong levels, and look for how the market reacts around those levels and take advantage.
Awesome. Fantastic, Cam. Well, thank you again, as always. Have a great week.
Chris. Thanks, everyone. Hope you enjoy the podcast, and we'll see you next week.